Good morning, everybody. This is your guy, Jay, the trustee. And this is the show that's really sponsored by AR AI Market Navigator. And I just want to thank everybody for plugging in. If you're on Instagram, please comment. We're going to really be talking about the market, specifically some of the things that happened yesterday and the day before, and why we're going to talk about the whole deep seek thing. And we're also going to talk about what happens in the market when the Fed announces. And so I know we have a kind of a mix of people. A lot of people are trading, some are thinking about trading, some have never traded. And I just want to make sure that we give you guys enough of the cover so you feel confident enough to put your toe in the water. Or if you're already trading, you probably want to step up to some of the AI signals that we have been able to generate. We're going to show some of that here in a second. Um, just want to let you guys know that you can always go if you want more information about what we're doing and how we're doing it. You can always go here to AI Market Navigator, and you can see it scrolling. The main thing is, I just want everybody to know that we are here to sort of help you understand that trading is real, whether you are somebody who is in the option space, or you're focusing on futures, or it's commodities, or forex, crypto. It really doesn't matter. The market is really math, right? It's not so much about all of the talking heads on all of these shows, or people that are trying to give you this super technical advice. I'm going to tell you, I shared this with you yesterday, that Jim Simons is the gentleman who started and ran the Magellan Fund. And I gave the analogy of how successful Jim Simons is and was, is that if way back in 65, when he got started, a couple of years later, Warren Buffett got started with by making an acquisition of Berkshire Hathaway. And as it turns out, that along the way, everybody knows the Oracle of Omaha, right? Everybody knows Warren Buffett, and he's a phenomenal guy. He's done amazing things in terms of what his business acumen is, and his ability to sort of root out business opportunities and create profits from it. How can you tell? Because their stock is unadjusted splits for their stocks since the beginning of I think they started in '69, something like that. Is like $100,000 per share, some crazy number, right? But as is, Jim Simons, his Magellan Fund was so prolific that they actually had to close it in 1984 because they couldn't bring in any more public money. So I'm going to tell you, if you think about what it means to actually raise funds for whatever venture you're going to focus on, it could be your business, you could be, in a business where you're going to focus on being a SaaS, right? Or you're going to be somebody who wants to start a dry cleaner or a nursery, and that would be nursery for plants or nursery for people, right? Or if you really want to get bigger, maybe you're going to create a new technology. Maybe it's going to be a new mobile device, whatever it is, right? You still need to make sure that you are capitalized. And so the best and fastest way to get capitalized is go to public money. Unless you were born with the silver spoon in your mouth, that old saying, right? You're going to need to have capital. And so capital is something that when you're running a business, you will hit a glass ceiling if in fact all of the money that you're actually seeking is coming through your operations, meaning that you are only able to access capital that's being paid to you via subscriptions, invoices, contracts, right? Whatever that happens to be. The key is that when you have a company, and you can either go and get private public money or public money. Public money means your company is on one of these exchanges, right? And now guys and women like us, we're the same individuals that will get on the market, and will either use our 401k or some other sort of retirement vehicle to invest, or we'll take cash or some other. Maybe you sold a piece of real estate, you want to get into capital markets, with the gains from that real estate, whatever it is, those dollars are really being sourced through you, through your efforts, right? When you're in public market space, like all of these companies that are on the Dow, Nas, Russell, all of these massive, exchanges, right? Those individuals obviously raising public money. So I'm sharing this story with you this way because when you really look at Warren Buffett, he figured out how to go and buy companies. And because of the acquisition of the companies, he was able to extract more value, pour that value into another company. And then he grew that company. And then that company had enough capital when it went and bought another company. So he's used this company acquisition stair step method, right? Makes a ton of sense. And again, Warren Buffett is, and anybody talks about, some person who is phenomenally rich, wealthy in America, Warren Buffett's on everybody's top 5 list. Okay. Then you have Jim Simons. And as Warren Buffett continues to acquire public companies, Jim Simons did it differently. What Jim Simons was focusing on was the math associated with how the market moves. And this is where we come in, right? This is why I'm sharing this with you this way, because I want to dispel the myth. Like, math is universal. It's the same math in every single language around the globe, right? The same math is universal, right? Like the stars, right? The cosmos is all math, okay? And so, until people come to grips with that, you're going to continue to sort of fight and try to create market opportunities based on what these people are telling you on television, right? Or they're telling you in your feed, or they're telling you at that conference, right? And what I mean is that most of the time, people are trying to sell you on something that's going to get you to buy that stock or buy that ETF, or they want you to do something. And quite frankly, if you take a step back, because of AI, excuse me, because of AI now, what we what we have what we have and in our midst is the opportunity to use the super smartest PhDs on the planet and give yourself laser focus to understand how the math actually is the thing that marks the market. Meaning, how do you know when something is going to win, or something should be bought, or it should be shorted, sold, right? How do you know? How do you know when you should take profit, right? Like, there's no human being that can do the math fast enough, consistently enough, that can keep up with all the market moves. Whether you are, at this, the steady Eddie, which is the Dow 30, right? It's the 30 largest companies, right? Of course, these are behemoth, multiple hundreds of billions and definitely trillions of dollars, size companies. These companies are so embedded into every single investment portfolio. So, there's not one whale that can actually take Apple and make Apple stock go up or go down in a, major move. Like, nobody can take Apple and move it by 5% up or down. It's just too big. Apple's nearly, I think this year or last year, they touched a $4 trillion runway. What that means is that company has a larger GDP, right? Gross domestic product, right? Than the majority of the top 10 countries on the planet. I mean, Apple is its own country, right? Knowing that, if a guy like Warren Buffett owned, I think at one point he owned 2 or 3%, in his sort of, his Berkshire Hathaway, stock. I think they at one point they owned that amount of Apple. So even Warren Buffett couldn't really move it. Like, if he sold some of his shares, it was going to be the price of Apple would move, in basis points, not in full percentages. Okay, so that's important. So I was sharing that Warren Buffett is amazing, but when I go back to Jim Simons, and because Jim Simons, it by heart, like by profession, this guy is a mathematician. So what does that tell you? That means that if you have a guy that's focusing on sentiment is like how, people feel about something, versus another guy who's focusing on what's the math of the thing. Math is finite, right? And because of that, he created a series of algorithms, because again, he's a super genius mathematician. And as it turns out, when you had one guy that was, cutting deals and working with companies and building companies up, and then extracting, some of the assets from that company and building another company with it and continue to run that same play. You're another guy that was looking at the math. So you remember when we were all young, some of you are still kids and you're watching this, and your mom or your dad, whoever it is, they tell you, hey, make sure you do your homework, practice your math, right? So right now, obviously, math is really STEM, right? And STEM is the science around math is really what it is, right? So all science is really math when it comes down to it. When you look at the math of how the market moves, things start to jump out at you. I want to, by show of hands, how many of you have actually watched the movie Beautiful Mind? And if you remember in that movie, there was, the scenes where, the main character, he was looking at a chalkboard, and then as his mind started to absorb, what he was actually viewing, the numbers started to just sort of float and come off the board, right? That we use that because I believe they got a lot of that through what Jim Simon, how he looked at that math. It was more like music on a music chart versus a play that's going to play out, right? Like one is more theatrics. That's how again Warren Buffett goes after it, right? Where Jim Simons looks at it, from a science of it. And if of numbers are math and the entire market is numbers, it makes a lot of sense why. So I know I buried the lead there because Jim Simons' wealth in terms of how he grew and it grew. That like Magellan Fund is so big. Like I said, they had to shut it down in 1984 from public money. They didn't take any more public money. Why? Because it was so prolific. The Magellan Fund is so large that when they go into the market to invest, they have to invest across pretty much the entire market. It's so big that if they decided to go into a specific sector and put, capital into that sector, if they put 1/100th of a percent of their fund in one sector, they literally will move the needle so much. It's almost like they're competing with themselves by driving the price up or driving the price down, right? So, and I use this before. So Warren Buffett is a thimble full of money. The Magellan Fund through our guy Jim Simons is the entire city of Los Angeles. So the entire city of Los Angeles, millions of people versus a thimble. That's the dollar difference in the impact that Jim Simons Magellan Fund has had, and it's private money. So I share that long story with you guys because I just want you to understand, like, when it really comes down to it, like, you know, know that the market is really math, and know that if you understand math, that you can have, real gains. I'm going to share with you guys now. This is a live chart, and let me pop this in. Yep, live chart here. And so this is, what are we in? This is Dow, right? And this is just this morning. Let's look at what the news is. S&P, NASDAQ opens higher. Yay. Okay. Banks, tech, tarnish. Banks are good, right? This is just, news that came in the last half hour. So there's a couple things that's happening right now. First off, where do we start? Let's look here. So we are Thursday, right? So we are right here, 6:30 a.m. So my son, myself, and a couple of our associates, we sort of collaborated on creating a series of signals systems that allow us to sort of deliver to us the the market, what's going to happen ahead of the market, right? And it turns out that it's right, over 80, 87, 89% of the time, right? I'll share some of that with you, but here's an example. And I'm going to start, I'm going to walk our way backwards, right? But this is live. This is right now, right? And it said at midnight, it's 12:05, right? So I'm very early, that that this was a buy, all right? And right now, this is continuing to run. So if we, executed that particular take, and in fact, let me do it this way. I want to start again, and I want you guys to see this. This is right at the bottom of that buy, and we're running, to right now. So this is telling you if you took that particular trade, you'd be somewhere around 122 um, pips. So right now it's 12,232. So if you look at how this works, this is an 18-hour sort of move at this point, right? It's 14 bars. So that 122 for an account size that's sort of a $10,000 account size. Let's assume that you've grown your account, or you started with a lower number and you grew it to 10,000, or you only want to put 10,000 in your trade account. If you're using the signals, you would have made, and this is probably about $10 per move, right? Per bip, right? Pip rather. In that case, you have about 122. So if you take 10,000 times 122, that would be kind of what that number is, right? You could do your own math. And again, we're talking about what happened, because obviously this started yesterday and it's still running, today. And something just happened, right? Let me get this. Go back. Do you see this little dot here? Right. This dot is telling us that this is actually oversold. So here is how this thing uh, takes. We work on the basis of let's enter into something. In this case, you're entering at 44,713. You can see that over to the right, right? And we're going to run this, and we're going to take, if you take one position, this is our thesis. If you could take one position, that means if that trade is good enough to put any money in, you can take 5 positions, right? And if you take 5 positions in this particular situation and you took capital off the table, that one oversold there, this gives you an opportunity to actually exit that trade. And again, just that quickly, it's 137. And again, if every single a point for you is either $10 or $1, you do the math. If it's only $1, you got 137. If you have $10, it's what, $1,300, right? In that 18-hour period. This is not rocket science, it's just math, right? As an example, let's go back here. And this was one that came in as a buy, right? And then it says, hey, here's another buy. We consider that to be a strong conviction, right? And how do we know? Do you see this cross line? So obviously, this is every time, and this is, I'm kind of obviously, hiding some information from you, right? Because I can't give you guys all the secret sauce. But you see where it has this green here. It's very light, and there's a little arrow. This buy is telling us, hey, let's get started, because we believe that this is going to be, and this is the AI saying this is going to be a nice move. So if you start here and you see that overbought right here, right? If nothing else, if you went there, that's 54. Okay, that's the overbought. And then what happens is that it's continuing to rise, but then we have a drop. So I'm going to come all the way over. I'm going to come here, right? Because the way we set this up is that you take the buy, we're taking 5 positions, and along that route, and I'm going to make this a little, I'm going to kind of widen it a little bit so you can actually see it. Okay. Let's go a little bit wider for you. All right. And this is just what it is. I mean, this is, again, it's a live chart, but I'm going to go here and we're going to take 5 positions and we're going to run all the way into where it says sell. Okay. All right. And we're going to take it. We're going to take it right here. Okay. So that's 51. So it was 20 hours to get 51. And again, if it's, that's only a $500 move. But what happens is that $500 move is only looking at it as if that we took one buy and we took one sell on the back end, right? And we didn't do anything else. Well, what's happening is that the way we have it set up is that every time we have a reversal, so you have this and we have this other indicator saying strong buy, right? And then in this case, we had this little bit of a drop off, right? And so as soon as somewhere in here, between here, we took a profit. And so we came here to another peak, and somewhere as it starts to tick down a little bit, we take another profit. And then we lit it right up here. And as soon as, definitely, because we have this overbought signal, this little dot here, that means we take another profit, right? And at that point, we could actually get out the market, but we're like, nah, it didn't tell us to actually sell yet. So we're just going to just hang on and let it, we get a reversal here. So guess what? Many times when you have a reversal, we're buying back into the market. We're taking another position, right? So now we're riding it back up and we have this reversal. This reversal, again, taking profit. You get the gist of what's happening. You're consistently either, because we know that we're in this strong buy scenario. So either we're taking profit or we're getting back in, right? And we're not closing out because we didn't close this out all until we saw sell, right? So if you understand what's happening here is that if you have, we're showing at 51 uh, pips here, right? And if that's $10 per, that's 500. But because we're taking profit along the way, and I'm going to show you some examples of what those profit numbers look like, right? Um, if you're taking profit along the way, this is how you actually compound, and this is how you drive the value of a single trade. You drive those numbers up exponentially, right? I'm going to share that with you. So I hope you guys got that one. It's just, and it was funny because um, when you, again, I'm just following what Jim Simon is telling us. He's like, hey, if you really want to make it, you got to focus on the math of the scenario. And because of that, we spent the last year, and this is no hyperbole, like we literally spent a solid year of time not focusing on, building a massive bag, but focusing on making sure that we had enough of the right math, right? That allowed us to really take advantage of, some of the things that we have been leveraging. And what we've been leveraging is the knowledge around taking accounts of various sizes. And let me give you an example here. And let me share. Let's go right here. Okay. So this is just, a random trade, right? And this particular trade is on an account. And if you can see here, we look at, we have 5 different sort of levels of traders. We have traders that come in that have very, very, very modest accounts, right? So people that are starting literally with $100, right? I know some of you guys like, how can you trade with $100? Well, we really focus on making sure that the people who need this the most, which is the people who have the least, have an opportunity to get in and learn, but also have to immediately, they can start to trade using the signals, right? You don't have to be a genius. You just have to be obedient because the signal is telling you when to buy, when to take profit, and when to exit the trade. That's all it does, right? It's very, very simple. And we've coded this to where, as you can see here, whereas anytime you see TP means take profit. So in this case, there's 5 take profit opportunities. So we're projecting out at where we can be taking profit for a particular trade, right? And so I mentioned that we have, different levels, right, of sort of, who the traders are. And I'm going to pull up a couple of them side by side here for you. Let me get in here and let me add an additional chart here. Let me stop that. Let me get in here. Let me grab, I don't want to grab the entire screen. I want to grab, okay. So let's do this. So this shows a resilient and then an ambitious. Why? A resilient trader for us is the one I mentioned that's, have a really modest account, $100 to $250, right? And this is just forecasting what the potential profit is on the front end, understanding that this was a trade that was, this is a short, as you can see, right? The entry point was here at 17,845. There's a stop loss that's put in here at 892, right? And these are the moving averages, either on a short or long. Okay, so that's a lot of technical jargon. If you get it, great. But know this: we have this segmented that we're taking five different profits, one at 10%, then at 15, 20, 20, and then 35. That means that as the trade moves, in this case, because it's a short, as it's moving down, we're profiting on the actual selling off of the market, right? And in this case, the resilient trader is somebody who only had between 100 to $250 on their account. Because of this strategy, what it allows us to do is take the first profit at $18 that was now going into the bag, right? And then then we took a second profit, which is 15%. You can see this is 56, and then a 20% are at 113. But because what's happening is the trade is building, right? And the compound effect is playing out. By the time we get and we take the fifth take profit, which is actually exiting the trade, we've actually collected $670. $670 was someone who had an account that was between 100 and 250 bucks. You do the math, right? This is what happened in the past, right? We can't talk about future results, but again, you have to understand historical context, right? Like, it's important to be able to sort of tune, in this case, our signals, our code is tuned to really look at the difference between somebody who only has $100, or in this case, somebody who is slightly more, right? A $500 account, right? Between 500 and 1,000, their move with between that 500 to $1,000 ended up being at the end about 1,340 something bucks, right? And you can see the position sizes here, right? This is, if anybody knows anything about the lots, right? So a point two, and for the resilient and the ambitious header is a point four. Why is all that important? And this is, you're like, well, this is not a lot of money. Why are we even talking about this? Because do you know that the average Black household has $24,000 in total net worth? So if that's the case across America, I repeat, the average Black household has $24,000 of actual net worth. Okay. If that's the case, it's going to be hard for somebody to actually do more in terms of being able to create more available capital. This is the reason why there may be people who need to start with $100 because they only have $24,000. They work their whole lives, they get $24,000 of net worth. Okay. Why is this so important? We created this platform to start with people who don't eat. Like, if you're in the prop trading space, and these are people who are they got this bag saying, hey, you can get this big bag, pay us 500 or 1,000 or whatever dollars as a fee, and then you can trade on my prop firm. And then if you pass a few tests, then you can get access so you can trade on this account. Oh, but I didn't tell you that there are some super restrictive parameters that you have to follow if you're going to be trading on a prop firm. What does that mean? That means that if you lose more than 5% in any day, in any movement throughout the day, they're going to stop your account. Basically, they're going to take the funds that you paid, your fee, and then they're going to take any additional profits that you created in that trade account, and they're going to take it from you. You don't get it, but they are going to allow you in the good graces, right? Hey, come back next month and do this again. Of course, they want to do that, right? This is why so many people of color are getting so disenfranchised, because of these prop firms. If you want, this is we're the antithesis, the opposite, right, of a prop firm. When you trade, it's your money on your trade account. You take these signals, right, and we can show you. Listen, here's one, right? It's just one trade, yeah. But anybody who can go from 100 to 250 bucks, and in, what do we say, a day or two, right? You can go, and that $100 or 250 can go to 670. Or if you have 500 to $1,000, you can go from there, and you can have an additional profit of 1,300 bucks. So if you had 1,000 and you got another 1,300 in, it feels pretty good to have your account sitting at $2,300, right? Of course it is, right? And so these are just some of the things that we know. Like, we want people to take the opportunity to essentially, like, learn that you don't have to operate through the lens where someone's telling you you can get a big bag, but unfortunately, you don't even have a bag, and you may be in this scenario where you feel like you're never going to get the bag, right? So this is why we created this, to kind of make sure that you have the opportunity to do it, and do it at a very high level. And that do thing is called being able to sort of trade. That's why we deliver signals to you, and the signals are accurate, right? And here's the thing: we want everybody to have we want you to be able to sort of take the time to learn how the markets move, right? But we also want you to make money at the same time, right? It's one thing to go to college and eat beans and rice the whole time and then get out and hopefully you get a good job, versus how about if you were going to college and you had, $250,000 a year job at the same time, and you only had to work 4 hours a day, right? Or 2 hours a day, and you can study the rest of the time. This is more like that, right? Where if you're in a prop firm or some other sort of scheme in terms of like giving other people access to your crypto or your dollars, like forget that. That's a losing proposition. So let's get back to this. This again on this side, right? This is a sell, right? So this position has what? We are looking at take profits again. These are the profit projectors, right, on this particular account. This is a proficient trader. And to us, a proficient trader is somebody who has an account that is, I believe, about between 2,500 and $10,000. Okay. So why is this important? Because on these are two different contracts that this same person, could have taken, right? But no matter what, um, we had a 10%, again, 15, 20, 20, and 35. The total outcome profit on that particular trade was 6,800 bucks. Okay. You can see the risk reward ratio, it's only zero point 0.7, right? Uh, and I just want to make sure when you look at this mask, it says mask risk. Let me be very, very clear as to what that actually means to you. It should mean to you. Give me 2 seconds to find this little explainer. Here you go. Okay, let's get this for you. Okay. So this is the risk management guide, right? So the maximum risk per trade, right? Whatever the account value is times 0.15%. That's the mass number. So if you have a $10,000 account, it's 1.5% of that particular $10,000 is what's actually going into the trade. So for instance, $2,500 is the max risk on any individual trade is 37 bucks. At a $10,000 account, it's $150 per account, right? So the risk protection framework, stop placement based on the ATR is really volatility. Okay. Position size auto adjusted to maintain this risk. So we basically always make sure you're in this 1.5 range in terms of the risk across all of the trades that you place. And then the scaling rules, right? Discipline, risk reduction, and built-in circuit breakers at key risk levels. So sometimes, I don't know, something crazy can happen. Some building, somebody flies a plane into a building, there's a plane crash, all these plane things going on. Apparently last night in DC, there was a plane crash and a helicopter in the plane and 67 souls are gone, right? This is horrible. But in that case, that would be one of those, circuit breaker moments, right? If something like that happened, but we account for that in the code. So, we're not about losing money, we're about winning, right? And I just wanted to kind of share that the risk component. So let's go back. And I want to make sure, because the majority of the people that are looking at this, they're like, all right, so this is the type of account that I have, Jay. So you're telling me that if I have an account and I'm trading and I have roughly, 10 grand on my account, you're telling me that I can make these significant moves. Yes, let me pull it up here. Here we go. Yeah. So at this case, let's assume this account is a $10,000 account, right? And on your $10,000 account, you're in a trade that lasted. I have to pull that up. I think this one lasted maybe like 3 days, right? Um, but the fact of the matter is, yeah, you see 2,500 to $10,000 proficient trader, right? Um, In this case, again, we're using the scale, right? Again, the 10, 15, 20, 20, 35 distribution that netted essentially 68% on that trade. Why? It wasn't one entry exit. It was taking five positions and actually exiting those five positions based on this math. And when you do that, you end up having that type of response. These are the type of numbers that I don't care who you are. Like everybody wants to have um, something that's going to get them to kind of step up and recognize that there's a winning opportunity that you can get to today. And we created this way for a couple of different reasons. We created it to make sure that if you're somebody who doesn't necessarily have a ton of capital, but you want to be able to grow your capital, right, which is, we think that's a brilliant thing to do, right? Let me show you something else. This is another little chart, and all I did was just I took this for you guys and just put them side by side, so it's a lot easier for you to see, right? The chart and the numbers together. Okay, so what do we have here? Let's bring this over. So the details. So in this case, this was the entry, and these we just use these internally when we're continuing to tune the actual algos, right? So this is really kind of stuff for us. So this was 61 bars, 4 days, 16 hours. And this is the analysis of a particular trade. So you can see five take profits. And this is relatively small, right? So the gain on this 247 points. And so what we're talking about is you can see here towards the bottom in red here, these red dots, these are our take profit opportunities, right? At this case, what we did was we stayed in the trade, but we took another trade. So swing, we swung down here. So we're on the short. And so we're able to pick all this up. So you can see here up top, it's giving this a corollary, right? So typically when you see this says, hey, I'm overbought. It's telling us, hey, there's an opportunity to actually short the market. Bang, right? And every time you see a reversal, where we've tuned this is that we take a profit opportunity and then we take a brand new trade in that. So we're constantly taking these micro trades as we go, as we over when there's an overbought scenario or there's an oversold scenario. This red dot here is overbought. This green dot here is oversold. And we just continue to play this all the way up and down every single time. This is because I learned this from Jim Simons. This guy grew the Magellan Fund. It's like the world's largest fund. Why would I want to learn from anybody else? Right. So, I'm not a mathematician. I just play one on TV. Right. And I get these things. I'm literally like, here's a part of my history. Right. I was in the military. They gave me a White House, a top secret, a paying on clearance. Right. So what happens is when you get out, they poach you to get out. And I went to work for a company and it was all about like data forensics and sort of math stuff and storage of a lot of data. So that's where I was way back in the 80s, right? And so since then, I had a lot of wins, had some losses. But what I learned is that I sold. We started the company, sold it, made some money. A couple of years later, started a new company in the same field, really ran that and sold that for a lot more money, right? And why was that so important? Because the lessons of actually taking a company and getting to the point where you have 200 employees, 4 offices, in around 4 different states, and you're running that organization, and all your clients were, Fortune 250, and eventually got to be Fortune 100 companies, right? I kind of got that part down, and I started to really focus on now I have whatever bag I have. We started to focus on crypto, right, way back in 2010. And obviously that was, it is what it is, and if you got some crypto now, you're super happy, right? Particularly if you started way back and you have what's called legacy coin. Anybody who's been in the market in the crypto space that long, you know what I'm talking about. And so, you have wins there that then allows you to kind of learn and take some time to do some things like understand how trusts work, right? How private foundations work, right? How these holding companies, that how they work. And a holding company at a federal level is a non-tax at the federal level, and a private foundation is non-tax at the federal level. And then there's certain states that say, hey, look, if you set it up this way, you don't have to pay taxes on that kind of revenue. So once you understand all this, now you have kind of a virtual family office. What does that mean? You have those entities that I talked about, you have some holdings, but now you want to go into the market. And because you're going to go in the market, you want to do it in a way where you're not just like waiting for some hedge fund manager or some person to tell you that, at the end of the year, you make 3%. That's BS, right? What we do is this, like we get into it, we learn it, and then we actually start to monetize it. And we get to the point with the monetization model, it works well for us. Then, because we are literally about the people. Like anybody wants to know, like, who we really are. So go to UnderRepresented Peoples Foundation, and it is URPF.org. And you can see that, we as Black people, we know for a fact that the deck is completely stacked against us. If you Black in America, you are fooling yourself if you think that you have a fair shot at this thing. You don't. You're never going to. It's not. Look, it took me 40 years to figure that part out. But now that I know, it is forget it. The only way you're going to win in America, if you are Black, you got to do it through capital markets and through real estate simultaneously, right? That's the only way to do it. And so why am I diving into it this way? Because I just want to like shake and rattle some cages here. I want you guys to know, like, I'm giving you, and what I'm sharing with you on the screen, this is the reparations. If you're Black and I don't care how old you are, you know that reparations is a thing, because obviously coming out of slavery, they were supposed to, the 40 acres and a mule, and, a lot, did you know at one time there was 923,000 Black owned businesses in America? Why? Because they were all farms. But by the time 1913 came around, those 925,000 whittled all the way down to 18,000. So how do you go from 925,000 farms and business owners only down to 18,000 business owners in that agricultural space? You know how? Because they literally stacked the deck against you. Okay. That's a whole nother learning. But if you want to know how to win back some of those dollars that were stolen from you way back in the day, from your lineage, from your great grandmom, great granddaddy, all those people who literally were slaves, you know how to get the money back? You get it back through capital markets. You get it back through understanding how real estate works. You get it back by doing what we're doing. You need a private foundation? Yes, because it's a private bank. You need personal trust? Yes, because you need to be able to receive capital in your name in trust. Okay. You need it to be non-grantor and irrevocable. Why? Because once it's set up, the Supreme Court will say, nope, no one can ever take and break anything that has anything to do with that trust. You know how you can tell? Look at President Trump. Remember all the money he was trying to take from him? He got a verdict of over $500 million against him. And 2 days later, this guy has another $500 million. But yet they say he didn't have any money because he didn't have anything tied to himself. Everything's in his trust and his holding companies and his foundations. Do the math. I keep telling you, Jim Simon, he's did the math. We're pattern matching him, Jim Simon. What you see on your screen is simple. You have somebody who made a modest $24 in profit. That was 9% gain. You have then the next profit in the same trade was 58, then 88, then 117, then 138. That could be like no money for anybody. But when you aggregate the percentages, is what I'm trying to tell you, it's 171% win in one trade. Why? Just because, again, we're taking multiple profits. We tune this thing to look at the future and then position it by taking enough of our positions on the front end. And then look at this. Go back to the chart. It's telling you, you see this? Sell, right? Well, what you didn't see over here, there's a buy, right? And it's green. So you would take it and you run it all the way up here. And doing that in that one move over that period of time, right, will give you exponentially more than we got on this chart here. Why? Because what does this say? This is only taking the trade from, this was January 22nd at 10 a.m. to the 27th at 2 a.m. So what are we talking here? We're talking going almost, a day under a week, right? That's how long it took for this entire trade to play out. But if you wanted to go out, if this was 1 week, if you wanted to go out, I don't know, 2 weeks, you would have literally like double the money on this situation. Why? Because look what the market is telling you. It says, in this case, we know that we had to get in. So we took this because we knew that there was an actual buy here. We jumped into market late. I would not suggest you always do that. But in this case, we had such strong conviction because what are we looking at? We saw an overbought, right? We saw this drop. We now know that this is again up, overbought again, right? And this thing is bumping along because the market was running hot. How can you tell? Because even though it's overbought, people continue to like hold on to their investments and jump back into more investments right here. This is what this is. This is the overbought. But when you see the line at the top and it continues to run, this is telling you that there's a lot of money in the market and everybody's sitting in the market because they believe some action is happening. And as you can see here in the chart, you can see it just continued to rise and rise and rise until it didn't. And here's what we know. You see a red line here and you see a red dot here, right? At this point, when you start seeing these lines stop and you see these dots stop, it's time to do what? It's time to vacate. As it turned out, there was a little bit of a move, right? So this is where the industrials are down here. I'm just going to tell you, this is where all of the institutional buyers rather are down here. So we focus on the institutional. These are all the retail people up here, right? So what are we looking at? We know that the people who are in this sort of institutional space, they have trillions of dollars. These guys have billions of dollars, right? So if you aggregate all of the retail traders, right, here versus the institutional, so the banks, the insurance companies, the multinational conglomerates, they're down here. And these guys down here, the institutional guys, are always ahead of the retail guys. And so what does it tell you? We have this, and this told us, hey, guess what? There's going to be a reversal. And you see the dot came on the reversal. So we took profit here, right? And at that point, we swung out because, again, that correlated with this sell. We swung out of selling out of that original buy, and we took a second position. And what did we do? We took 5 positions here, and you ride it all the way down. Okay. And this is a clear sort of tracing here. We love it. Why? Because the green dot says, hey, the market is now oversold. Think about getting back in. And again, you can see how it just continues to go on and on and on. So I just making sure that, listen, this is somebody who obviously had $100 account. This is an example, right? We took multiple profits. That $100 ended up being, I say 100. Let's say 100 to 250. I'm not quite sure. I have to look at the numbers. But you're talking about $427 that was made, over that period of time for this particular trade. So this is somebody who only had, a small number, but inside of a week, essentially, even if they had a $250 account, they're up another $200. Well, they had a 250 account, another account, the total profit. So that was it's 1.75%. Yep. Here, gain. Everybody wants that. So imagine you had a 10,000 or a 5,000 or a 19,000 or whatever your size trade account, 100,000. It doesn't matter. We don't care about the account size in the sense of the percentage gain is the percentage gain, right? This is what you're about. You just want to continue to see the math work in your favor. So, couple things. I'm watching now. Obviously, I always have up Bloomberg in the morning, and I just have it on silent, and I'm just kind of looking at a lot of the actions for the day and what's going on. I see at time is it's 7:23 here on the West Coast, and the Dow's up a quarter point. The S&P is just a little hair over a quarter point. The NAS is, for the most part, flat this morning. The VIX is nice. So the VIX is telling you got about 5% volatility. So the volatility is a good thing, for all traders. And because our brand of trading is, we're focusing on. Let me bring this up real quick. Let's see where we are right now. Every now and then we'll just jump right back into a chart. Okay, see exactly where we are. at the moment. What do I see here? Let's see. Are we still operating off the same news? Stocks climb on Meta lift. Okay, so Meta, obviously, I mentioned earlier that we were going to have a little dialogue about DeepSeek, right? So DeepSeek again is basically it's like ChatGPT, right? It's OpenAI, but a Chinese version of it. They literally rode on top of their whole um, their LLM. They got trained. Their LLM was trained, if you will, by OpenAI, and it's a Chinese company. And everybody's trying to like the world's coming to an end, and the market dropped crazy, the other day because everybody was like, and it was the Nas that dropped. So all the technical companies, the tech companies, they got smashed just because of the news cycle, right? That's why you can't be an emotional trader, and we're not. Let me give you this. This is another. This is again the Dow. This was as of the 29th, Wednesday at 8:10 a.m. And it's telling us right here. If you took this, you would start here, and let's go until here, right? And it said buy. So we're going to stop out right here. That's 158.59. And if it's at $10 a piece, how much money is that? Right? Do the math. $10 times 151, right? Um, it just depends on kind of the type of scenario that you have. I'm gonna do something here for everybody. I'm gonna do a live analysis. Okay. I'm gonna take this here. I'm gonna come. Where am I? I'm going to come here. Now, obviously, I just want to share. You see this green dot here and this green dot here? These are each of these are telling us that in the industrial side, not industrials, in the institutional side, that this is a moment of oversold. So technically, what's happening is we're definitely taking a profit here. So I'm gonna do something and just tell you just by the easy numbers. Right. I'm gonna click this. I'm gonna take a quick screenshot here. I'm gonna put this in my super smart assistant here. Give me 2 quick seconds, everybody. I think you guys are gonna be. You see, I just took that snapshot just that quick. And let me come in here and let me take this screenshot and I'm gonna let's go. Let's assume we're going to walk up the off the process. We're going to start with somebody who's a resilient trader, and I said that's somebody who has between 250. I mean, that has 100 to $250 in their account. Okay, and then I'm going to do the same thing with somebody who has an ambitious account, and you guys will understand this as we run it. I'm gonna, give me a sec. Thank you. Appreciate you guys having some patience on this situation. This is live, obviously. So we're doing an analysis. I'm going to share with you um, chart setup. because I have a little calculator here and we got a bunch of code. Okay, let me see some. Okay. So we're going to run, we have the resilient, the ambitious, we have, let's see here. Yeah, the resilient, the ambitious, we have the strategic. Give me a second. Okay, here we go. So let me go back here one more time. All right. And then we have a proficient. So the resilient is somebody who's got 100 to 200 dollars, $250 in their account. The ambitious is somebody who's going to start their account with 500 to 1,000. The strategic is somebody who's got 1,000 up to 2,500. The proficient is somebody who's got 2,501 to 10,000, and the elite is somebody who's coming in with $25,000. Here's the great thing: this is all your money, right? Um, and this is like you control it, the whole thing, because you're just running it on your account. You're just using our signals for you to make your own money, right? That's the number one thing I want to make sure that I impress upon you. So see, I have the first two. Let's get the proficient. And then lastly, we're going to go with the elite. And I appreciate you guys, hanging on here. Just want to make sure that you can get a real broad, view of exactly like I don't know where you are financially in your life, but all I do know is that when you can, essentially you're setting it. I'm not going to say and forgetting it because you're focusing on taking profits, right? But as those profit opportunities manifest, you're getting a text message, right? And if you have a trading view up on your phone, you literally are like, you can be in the line at the bank, you could be, getting on a plane, you can be sitting at home, you could be laying in your bed, you can anywhere, and you can take the signal and you can apply the signal. Okay. And now Okay. And we're just working on the last one. And again, this is the exact same chart, but different parameters around different parameters around how the actual trade is running on that chart. Where am I? Okay, so here we are. Okay, thanks, guys. I know I kind of dropped out there for a quick second. Um, let's get here. All right. So let's go back. So I'm going to do a few screenshots for you. And the key is, oops, let's take this so we can see it better. Make sure you can see the full screen on each one of these. Let's see here. Can I, this small. Okay, there we go. Yep, and this is just a really basic setup for you, but let me now pull all these up. 1, 2. Is this it? That's, oops. Okay. It's 27. I have another one here. And then we have another one here. Okay. For each level. All right. Let me do this. Let's do it here. And am I here? And it's here. Okay. I appreciate your patience. I want to make sure that I give you something that you can kind of see graphically, and I want you to understand, how the actual profit works, right? Because again, you're trading for profit, not for practice, right? I always say this all the time. People are like enamored by charts, but if the chart's not actually, creating the type of financials that you need, we need to be doing something else. So I'm gonna give it to you this way. Let me close this out. Okay. And I'm just gonna just share this with you so you have a nice viewpoint here. Let me go to share screen, pop this up, go here. Okay. So, yep. Okay, you guys give me 1 second. Gotta grab something.